Hi, this is Randy Finney with Right Side of the Chart, and this is video number 2 for today. It's Tuesday, October 15th, 2024. It's 2 p.m. right now as I'm starting this one, and here's what we're going to cover in this video. It'll be more focused on trade ideas. The last one was a pretty long video, just kind of overviewing, giving you my near-term and longer-term outlook of treasuries, how it might impact the financials, although I didn't really get to do much of an overview on that. I had a request in the comments section today on that question put to me on the big banks, and if I can get to them in this video, I will, but I'm trying to cover as many of the trade ideas that I've been highlighting in recent weeks, being offline last week, kind of quite a few updates are deserved. So I'm going to dive right into it. Here's the order I'm going to do my best to cover these. I'm going to start out with commodities. In that, I'll hit on the energy commodities. That's primarily, we're going to look at crude oil, natural gas, the ag commodities. I want to do an update there for you on wheat, corn, soybean, the commodity ETFs. Then I'll roll into precious metals, gold, silver, and GDX. Time permitting, I might have to truncate this video just to keep it watchable. I try to shoot that 30-40 minute range. And if I can get to the stock market and the VIX, semis and the banks, I will. Those are kind of a couple of the important sectors, the semis and the banks within subsectors within the stock market. Remember, commodities, that doesn't affect the stock market or the S&P or the Nasdaq 100. So those are completely unrelated and uncorrelated trades. So let's dive right in. USO is the crude oil ETN. You had going back, remember back earlier in the year, I had the color-coded zones for both the 10-year Treasury bond ETF, which is IEF, as well as USO. And those color-coded zones were how they would affect the market, because the market was, especially earlier this year, hypersensitive on inflation. Hanging on every little CPI report and any other report that would be indicative of inflation. And of course, there is, as I often say, there is not a single thing out there with even a close second to kind of get a real-time indicator on inflation, such as crude oil. It is one of the biggest components of the CPI. Housing is the biggest. But crude oil is up there, and the thing about housing and a lot of the other components, they're quite a bit of a lag time. For example, even the food component it's not the price of grain, corn, soybeans. It's the price of the cost of finished products, which there's also a lag there. But we can look at tick by tick, second by second, 24 hours a day, and see what crude's doing via crude futures, which trade around the clock, or USO. And so we know that if crude prices are going to go higher, that crude ultimately trickles down into the cost of just about everything, from the cost of a semiconductor chip for energy to make it, and everything else involved there, the manufacturing process, down to the loaf of bread. The grain doesn't get itself to the market. It doesn't harvest itself. It needs to, Farmer Brown's got a big John Deere harvester to get it, and then to get all the wheat out of the field, and then that's to bring it to market, and so really it permeates into almost all aspects of the economy. And so that's one that, again, when the market, if we return back to that hypersensitive mode, then this is something you want to watch. And recently we had a nice run up, and we went through. I haven't harped on the zones lately because we got away from it, because inflation had abated, and again, the market wasn't so hypersensitive recently. It hasn't been, but that may come back. So it's just one of those things that I point out, something to watch going forward. But we did get up, I noted the other day or last week before I looked, right up to that orange zone. And these zones were there for, they weren't just kind of some random thing, I pulled out of thin air. They were based on support and resistance levels. And this one being the, as high as crude's gotten since really this whole, since 2023. You can see my year breaks here. This is 2023, and this is so far 2024. And so that's why that was a red zone. And then each time we did get up into that orange zone, we had the two biggest corrections of the year in the stock market. So Was predicted in advance that would happen, and that's what happened. That right here and here, when we got up to those high levels, those nosebleed levels in the orange zone, stock market had its two biggest corrections so far. And so what I wanted to point out, we didn't get into the orange zone, but we got to the bottom of it recently, and that which is price resistance, and we had a pretty good rejection. So that's brought, at least for the time being, crude prices down quite a bit. We zoomed down to a 60-minute chart, and we had a little trend line there. I don't have much of an opinion, but if I had to be long or short right now, I'd be long. 72 is support right here. You can see major reaction lows there. Then you gap down below it. It became resistance, got rejected there. Danced on it a little while, regained it here. You can see we even had, once we regained it, it was support. So that's it. But other than that, the charts aren't very clear to me. It's been very erratic. Obviously, there's a lot going on in the Middle East, which has also caused this. I don't want to spend much more time on that. I just wanted to show you that's where we're at. I don't have much of an update, but overall, crude prices remain elevated. So what I've done here now, I've zoomed out. Let's go to a weekly chart. You can, and let's turn off all the lines. You kind of discount COVID, prices crashed. Crude actually went negative in crude futures briefly due to storage issues because the economy shut down. But the point is that we are, we're in this range, and at least compared to recent years, it remains somewhat elevated right there. That's kind of bigger picture stuff. And that's it. So I don't want to spend too much more time on it other than to say I do watch it day in, day out. I watch for opportunities. We've had quite a few trading ops on this, and when I see the next high probability entry, I'll get it out to you. Now, the other one that we've been trading more recently, more of a position trade, was UNG. I'm going to loop over to the long-term chart of natural gas future. Okay. So if you recall on UNG, this is nat gas continuous contract. These are the futures. When I'm on the shorter term charts, I'll use NG. Same thing. This is the long-term chart here. It goes back to 2005, 2006. So here's all your year break lines right there, and you can see the case was made here. Natural gas is at or was recently coming off multi-year lows, which is also support. It's around that 150 level right there. You can see my price scaling: $1.50, $2, $2.50, $3. And I pointed out all these divergent lows over the years. I'm just going to circle them real quick, or just take the arrows and draw up. So you can see that was a 222% rally, 158% rally, 234, 207, all the way 207%, 563%. And so far, I'll have to annotate it here, which I'll do right now for you, and just update it because I haven't done that. I grab this line, and I'm going to show off. Oh, no, that's correct. Off the divergent low, I don't need to update it. It's where we were before, 110%. So that 110% rally off not just positive divergence, but also long-term support, doesn't mesh with the average here. Again, if you take an average 560, 200%, 234, 158, 222, I'm just ballparking. Even if you temper down that extreme run when Russia invaded Ukraine, you're still looking at around a 200% average return off a divergent low in the past couple decades, or decade and a half, or whatever we went back here. So 2 decades. So that's that, and it still looks good longer term. Let's try to drill down to the nitty gritty near term, because that's what it's all about. 60-minute chart. We had, again, the divergent lows on the 60-minute charts. Both of those were long entries, double bottom. That's long-term support. Before I left town, before I went offline, if you will, I said ideally you want to stay back above the top of this basing pattern. Remember that big W basing pattern right here that we broke out of? And we didn't. We fell back into there, and we're all the way halfway down through there. Now we are at support. That's the former $13.96. We'll call it $14. We're trading at $14.04 right now. That's this former T1 price target right here. That's in purple right there. So there is support right there. I don't see divergences on the 60-minute chart. I like to see those, at least not on UNG. There is a downtrend line. Look, again, longer term charts still constructed. You don't always get the perfect setup that you want. So I can't tell you with the utmost conviction that this is a great buying opportunity for the next leg up, but it can very well may be based on the long-term charts. We're about halfway back into there. I told you if they did test the bottom, the top of the zone, they'd probably undercut it. We went down a little more. I think I was saying in the last update I would be comfortable with a move down to that 1443, but not much below it. We're there. Again, we're about halfway into that trading zone. So like I said, it is at support. You can make a case to go long here with a stop somewhat below. If you're riding it out, if you rode out this pullback, remember we were here at T5. I told you at that time I put tight stops on what was about 2/3 of my position because we had this bearish rising wedge pattern right there, and that was a very clear, a bearish rising wedge with negative divergence at resistance, that fifth target zone at the top of the target zone, and we broke down, and then we went on to break that secondary trend line as well. So I'm lukewarm on it right now. I think if we can pop that trend line, we can go up, and it will likely be the next leg up to those longer term targets I gave you on UNG. Okay, looking at the futures contract, this is the November contract. Remember, it's going to show a little different than NG. That is at even better support. You have this level right here. Let me put a line for you and tell you the exact price level for your futures traders. And even if you trade UNG, be aware. So we have another distinct reaction low. So far, we bounced off that about 244 right there. Again, 1, 2, 3. We don't have the positive divergence, okay, bullish divergence like we did at these two previous lows. And we are coming off that same bearish rising wedge I pointed out there. However, support is support until unless broken. So again, you can take a long entry here with either a tight stop below, or if you want to give it a little bit of room, probably best to keep it tight. If we go down, what happens is, if we go down, we could just, a lot of stops could be hit. We could go pretty quick. The other entry or re-entry, if you do get stopped out with a tight stop, if you go down to see a recovery back above there, because any flush out move would be a nice bear trap. Shake out some of the last weak-handed longs, suck in some short sellers, and then so if they ramp back up. So again, to reiterate, it is objective to go long here with a stop somewhat below, and or on a reversal if we break down there and then snap back above that 244 level with conviction, and that could trigger the next leg up from a longer term perspective. This is a six month chart with 2-hour candlesticks there. Okay, wheat, also a longer term trade with a lot of potential. I still like it. It had just like it was almost seemed to be not all of it, but the majority of the commodity complex, a lot of commodities recently had a pretty healthy run up, and nothing goes up forever. We had a divergent high right there on the 60-minute chart. That's what we're looking at here, WEAT, the wheat ETN. We're coming off that big divergent low where we went long there. We went up, we hit my first and second target, overshot the second target by a hair when we put in that divergent high, and then we went on to break that nice well-defined uptrend line, which triggered this drop, but that's taken us back to this nice, again, similar basing pattern right here where we broke out. That was support. I've had this support level here for quite a while. It was bullish in my opinion when we regained it here, and this is the breakout back above it, a back test, and so I do like wheat right here back at the former first target. Remember, this was the original entry here, so right there I believe, and if you're micromanaging or swing this trade or just sitting tight with it, it is objective to go long. Stops are going to be dependent on your target. If you're targeting T7, well, that's up here. That's about a 24% return. You could give yourself easily a, that right there to take it down to about here is a 6% stop. I'd say that's about max. Down below that R1, S1, which is now S1 support level 492. Or you can use a tighter stop if you want, if you're only targeting just the bounce up to the next targets there. So that's your update on wheat. Bigger picture, coming off that big divergent low on the daily chart right here. Sister trades on this one are corn and soybeans. Corn also coming off the divergent low. On this daily chart here that we're looking at, we broke out of the bullish falling wedge, hit that first target on the daily, 1882. I had different targets on the 60-minute, and we're pulling back to this support level. Here's the 60-minute chart. Divergent low, break out of the bullish falling wedge, went up again. That was the price support I just showed you on the daily chart. You don't see it here on the 60. We did take out this uptrend line. That's not great. We're at this previous reaction low. I'll add a level there. That's minor support at least. A couple of more reactions along there. So same thing. And remember, corn, wheat, and soybeans tend to roughly move together. Same thing, breakout on the daily chart of soybeans, SOYB, bullish falling wedge, rallied up, pull back to that 2150 support. There it is on the 60-minute chart, divergent low, trendline breakout, T1 hit, T2 effectively hit, close enough, then broke the trend line, and it's pulled back. There's actually reaction high here, minor support. So again, I would say I'm lukewarm bullish on these guys right here. Can make a case to add, not crazy about the scope of the correction so far. But like I said, on wheat, and that's the main one I'm been focused on. It's back testing the top of that recent basing pattern again right here. And so that one looks good. And if wheat runs, the rest will sooner or later join it most likely. All right, that's broad-based commodity ETNs or ETFs. You have DBA, DBC. DBA is the agricultural ETF. It's just ag commodities, cattle, soybeans, sugar, corn, wheat, coffee, etc. You see them all in there. That one's still looking strong. So this is I've been talking about this one for quite a while. It's just more of a longer term investment theme, new bull market in commodities, especially the ag commodities. Man, that one's I do see, hold on, I need to point out, we have at a divergent high. Remember, we put in a divergent low here, rallied. There is divergence. What I'd like to see is that divergence taken out. Stops are going to be dependent on where your entry price. I've been highlighting this one for years at different points, so stops are all dependent on what your average costs, even if you're in it. There's a minor uptrend line you want to see hold. That could trigger, you could put a tight stop there. I'm going to pull this line down right here, just kind of fit it a little better on here. I see some support around $24.50. Bigger support down here about $23. So that would be at this point, a more liberal stop and tighter stops below those two levels. Don't know if I'd be adding to it right now based on that divergence. I'd like to see that divergence taken out. DBC, throw in a commodity tracking ETF that has everything in there, including the agricultural commodities I just covered, like in DBA, but you also have energy commodities, gas, crude oil, things like that, and base metals and all the other good stuff in there, gold, silver. This is the one-size-fits-all commodity ETF. And the downtrend line you can see I have here is kind of meh. It has a few reactions. One where you start out here, didn't quite touch that level. And it's probably because it has so many different commodities in there with just completely unique and different charts. But we're still coming off that divergent low. It's still longer term like this one. It's had a pullback here because of a pullback in crude oil recently. But, still a potential long-term play if you want exposure to the commodities arena and you just want to shotgun approach it. I like to be more selective on the commodities I'm trading, because at any one time I'm usually long some commodity or another in my one of my accounts at least, and then short others at any given point in time. All right, let's move forward to gold, silver, and the miners. GLD still got this big divergent high building here, but nothing major yet, and it won't be until we take out this trend line right here. You have this potential wedge forming on the 60-minute chart. We're still an active trade. We had to point out here that divergent high. We had a sell signal there on this bearish rising wedge break. We went down, hit the uptrend line right here, this minor trend line. But as I often tell you, I usually don't trade gold. I'll use it to chart because you get more bang for your buck trading silver and or GDX. And so all I can tell you, there's a little minor trend line there. we're above it, but not very impulsively. Remember, we're still coming off a divergent high, and here's what I'm going to do for you. I'm going to extend that. Should gold happen to eke out any marginal new high soon, if you draw it like this and this and this and take a trend line there, it's going to be DH2. That'll be DH1, and then you'll duplicate that. And if we get it, it'll be DH2. So I can't recall the suggested stop. I've been hand drawing those in on the screen software, but the ones that I've been trading and actively trading too. Silver to the button, hit that T2 and bounced as expected. We went down, we undercut T1, hit T2. That one, gosh, I'm trying to remember where we shorted, somewhere in here. It was good for a quick 6% or so drop. And now you have a little minor uptrend line there. And look, we bounced back. This was S1, meaning first support level when I gave you the setup back here. S1 support, once you're below it, becomes resistance. So we're testing that level. Again, it was already there created back on 925. So right here, somewhere, right here, is where I created that line because it was support, it was resistance here. And you can see how well it's still acting as resistance on this bounce back. So a break of this minor uptrend line should open the door and take us down to these next targets I have. T4 is still the final official target. So a trade that was currently, still profitable, not by much. It's bounced back to about where we shorted. I think it was somewhere in here. And it was conditional on gold breaking down. And then GDX, same thing. We hit our third target on GDX. Gave you that one on a breakdown of the bearish rising wedge. We went on to hit T2. We bounced. That was a 4.75% or so gain. We hit T3 for about an 8% profit, at least from the wedge breakdown there. I think it might have just broken down when I got it out to you. So yeah, still about 7.5%, 8%. And we bounced back. We have a couple reaction highs there. And whether this one goes down or not, I think it will. I still maintain T4, but you're going to need to see gold and silver take their next leg down. I do have a little bit of concerns. I'm not as hot right now on it as I was because I'm watching some pretty big divergence building on the euro-US dollar pair here. Remember, the gold and silver tend to move positively correlated with this. And divergence isn't a buy signal. But it's a condition that you could get a rally. Then we had this divergent high right here, and then we broke that wedge, and this is the daily chart right there of the euro-US dollar. So I maintain those targets in gold, silver, and GDX, and looking for the next sell signals to open the door to the next leg down. But don't fall in love with them. Gold's had a pretty relentless bid for a while now. But I do think we'll get that next leg down soon. All right, what else? Doing pretty good on time, 22 minutes in. Let's talk the stock market just quickly. QQQ, I covered this briefly this morning. Told you since the last chart I got out to you, I added this minor uptrend line this morning, and that syncs up with the one on NVDA, which broke down, took us down here to the secondary trend line right there, which we're currently testing. So sell signal as I do that. Oh, actually, we just took it out. Okay, there you go. Not by much, but 60-minute chart, not very impulsive. If I wanted to, I can tweak that line, come in and catch the bottom of this candle. This is how my trend lines start on the early September reaction lows, a few of them there. Come in and catch this one from, what is that, about the 7th of October, I believe, right there. And then boom. So we're starting to crack that as I'm doing this video. Based on the technical posture, we failed. We had a rejection off the top of the gap. The back fell right there, this big gap, right after the market peaked. I think we'll go down there, and then so this will be a sell signal if we get a solid 60-minute close below there. And you can see 488.27, all the better if that breaks, and then even better if this breaks. So if I turn off all the lines and just draw out for you what I see here, you've got the same uptrend line off the lows, and this is our divergent high. It's a bearish rising wedge pattern. And then this is that minor trend line right there I gave you. So break, next sell signal there, then a break of that trend line, and then we'll start refocusing on those longer term targets I gave you a while ago, which are still in play, we'll call them bear market targets. Kind of, again, pushing upper limits, but we're still well within my market top range, and unless that gets taken out, as well as S&P 500. Still viewing this as a objective, area to short, get short, new shorts, add back shorts, however you're trading. There's just been a lot of swing trading opportunities here. The market's very conducive to swing trading lately. Alrighty, the NVDA trade, I talked on that this morning, broke down. You had a price alert set, jumped on it. If you jumped on it, you hit that first target. Again, that was, I hand drew those T1s in a T1. I'll just add them here with this platform. So they're T2. And T3 is the intersecting 123.24, 123.24-ish price support plus the back test of the downtrend line. They come in roughly together right now. There's the downtrend line. Looks like a little potential flagging action here. That's a flagpole. This is what we call a bearish pennant right here. Some flagpoles, your impulsive move down. If you want to take the measured target, you measure the impulsive move. Right there, you don't want to include that. That's not impulsive, so that's where it really started waterfalling down. Then you have an area of consolidation, and you want to check on a bear flag pattern. You want to see the flagpole on elevated volume, which it was, and then declining volume, which it has been on the formation of the flag. And then your sell signal comes on a breakout below the flag. If it plays out, simply take your measured target, add it to the lowest point of the pennant or the flag. They're the same thing. This is a bearish pennant, bear flag pattern. It just looks like this. Bear flag, that's a flag, bear flag. And this, like that, is a bearish pennant, which is closer to this. And then that gives you a measured target, which would take us down. And when I see this, by the way, when I have a measured target that comes right, in this case, just past major support, which is my third and final target in that trend line, then that's where you want to cover. By the way, that would be... We could still do it and measure it like this, and there's a measured target. Maybe the drop isn't as impulsive, and it's going to come in right there. The distance, depending on, because this trend line is downward sloping, so it comes in at lower and lower prices. So something to watch for. If that happens and plays out as such, I can all but guarantee it's going to take the Nasdaq 100 down with it. NVIDIA is the king of semis, so it's not mere coincidence. I gave you this update on the semis yesterday, showed you we had this bearish rising wedge, divergent high. This is an active short. We already hit our first target, bounced as expected, so this one's playing out as it should be, and then triggered that, put in that marginal new and still divergent high, broke down today. T1's already been hit. We could certainly have another reaction there, but the door is open. We could go right on through it. Once the first target's been hit, I kind of check it off, and it opens the door, increases the odds that we're going to go down to the next target, especially once that's broken. Now, we haven't broken T1. So when T1 breaks, it's going to increase the odds. We go to T2 and then T3, which is the first of the intersecting downtrend line, or 210.90-ish support right there. So that's what to look for on the semis. I told you in the last video, I mentioned towards the end the VIX. Let's just talk the VIX real quick. VIX Volatility Index. Still elevated. Remember, on the bigger picture, we're coming off this big divergent low, aka positive or bullish divergence right here. We've been building divergence for a while. We had that big spike up when we were short. We were long the VIX via VIXY, if you recall. Had a very nice trade on that. And that was back, was it on the daily? Oh, I must have, all right, since the trade's closed out, I must have taken off the price targets unless they've, oh no, it was here. It was here. Oh, different board. There it is. Okay. So I gave you at that time, we went long right here, even I believe before it even broke out in anticipation of it hit our first, second, third, fourth target, and then give you a potential T5 target there and a potential T6, but I called them in there. And so this is the new targets that I gave you back, gosh, right here on this pullback, somewhere in there. And I just want to point out that the VIXY, it's not going to track the VIX as perfect. Nothing can. The VIX is the spot VIX, VIX is an index that you have to use a proxy to trade, some type of derivative such as VIX futures, options on those futures, or the ETNs that then track the futures, roll into them like this one. But I just want to point out that So you had the market kind of inching back up towards its previous highs, but yet you have the VIX stair-stepping higher here, at least making higher lows. You can see 2 reaction points there on VIXY. So if we can pop that, it's probably going to want to run, and that will almost certainly coincide with a breakdown in the aforementioned support levels I gave you on QQQ. Even though VIX, VIX tracks SPY. I'll get to SPY in 1 second. It tracks the S&P 500, or I should say, it's the methodology of the VIX is based on put and call buying on the S&P 500. But the Nasdaq drops 10%, it's going to pull the S&P down with it. There's a lot of overlap. So let's go back to the spot VIX real quick. Let's look at the 60-minute chart here. Let's see what I have marked up. Oh yeah, so I'm going to zoom in a little bit. Divergent low, divergent low, divergent low, divergent low. We had this most recent bullish falling wedge right there. Popped that, ran up, put in a little divergent high right here, pulled back. But you can see it's been stair-stepping higher recently. And as I mentioned with VIXY, you've got a couple reaction highs. These are almost in line with each other. So a pop of this little minor trend line, and more so, I'll put a new line up here for you. That's where it should start to run if it can take out that level right here, about 2384, and then you can see potential targets there. Okay, I had 2 comments that I answered just before this video. Somebody asked about Netflix. Is it short entry triggered? I believe I set a break under 700, and we hit a low. We spiked there. 699.78 was the low. So you're talking, that's only 22 cents on a 700 point security. So that's mere basis points. A basis point's 1 fraction of 1%. And I always say, if you have to squint to see it, give it the benefit of the doubt. Now, if you took it, I think it'll break. That was my answer. Look, if you haven't taken it, I'd hold off. Wait for a solid break of 700, at least a 60-minute close below it. You can see that, it's a nature when you're looking at a daily chart. Sometimes you get those little spikes down below it. This one doesn't even register. It was so, and I have the line at 713. It still looks like we didn't go under it, but you got to go in real close. Either way, you can see it's good support. So that's S1. Remember, that's and we broke down from the wedge already. We've just been moving sideways. So I still like this one. But if you've already taken, or if you've taken a starter position, I would wait for that break of 700 to add to it. All the better. If the S&P breaks, the Nasdaq breaks down, which looks likely, then this one will go. So again, if you're in it, no problem. I think it still looks good. It's going to look a lot better under 700, and then even better below when S2 goes. That's 685.54, and you already have my targets for that one. The other one was the banks. Somebody asked about the banks. You can look at any of the bank ETFs like KBE. You can see big divergence right here. We have pretty much also price resistance right here. It's had a couple of failures right there at about $55, and it popped up today, but they've been fading that so far, and somebody mentioned that. So I gave you my thoughts on the banks earlier today. Based on, especially, I really focused on the regional banks. And I already covered those a little bit, so we'll leave it there. We're still at that level where I think it's objective short. But all the better if we see these levels fail. And again, the technical posture. Somebody asked me, the question was, here, let me find it. Okay, here it is. Hi, Randy. Today, Goldman Sachs, Citigroup, and Bank of America all published good earnings, and they opened high but kept dropping. How do you iterate such chart? Is it the right time to short these companies? Well, here's my answer. A short on them now would be quite aggressive, as I don't see any decent sell signals. But from the technical posture of the banks, I think they're poised to drop double digits in the coming months. I'm about to start a video now and plan to cover the financials. So, I don't see sell signals today, but I did recently. If you recall, I went through the banks a couple weeks back, a month or two back, and we did put in. So I'm just going through the components here of the banking sector. We did put in a divergent high, and I listed JP Morgan and these other banks as shorts. And I do think they'll go down. I told you I would play that game where I look at who's reporting earnings and which way the ultimate direction will be. The ultimate direction, again, I never react to the initial reaction. quite often I'll see an initial sell-off or an initial rally, either the in the pre or after hour session, or even the following day for a couple days. I'm talking the lasting reaction, where the next 10% will be, whether we go up 2, 3, and then drop. And so it's still down. And so remember, we had the big divergence, negative divergence there. This high today is simply DH2. Take my divergence line, all I do is simply extend it. We keep making lower lows on the indicator. This is the definition of negative divergence. When prices are making higher or equal highs, but yet your indicators, these momentum indicators, are making lower highs, it shows you the momentum's waning. It's indicative that a trend change is likely. I'm going to try to see if I can fit another trend line right here. Yeah, there you go. There's a trend line. I'm going to set an alert on that. That should do the trick right there. I just pulled a trend line off the October lows on JP Morgan. So as I said, we had a sell signal here. We're right back to that same point effectively, but right now we don't have any sell signals. So, divergences and overbought conditions are not sell signals. Let me repeat that because I say it often. Positive divergences, which are bullish, are not buy signals. Neither is oversold, but they are conditions that a trend change is likely, so then you wait for a sell signal. I don't see right now, if we could get some type of candlestick reversal pattern maybe in the coming days, or a break of that trend line should do the trick. And then kind of a lights out level, I think, for JP Morgan is going to be below this level here at about 203.47. That should do the trick. And then real lights out, like for longer term swing short, below 191.42. It's really good support. I see a gap in there, 2 major reaction lows, and the 200 days will have been taken out. And then that's where I'll start looking at long-term targets on JP Morgan. But right now, like I said, it's it's not pushing, testing the previous highs, and no sell signals. And I'll run through the rest of them. Bank of America still below. So remember, they were, this one and others were, highlighted as short opportunities back here. We hit the 200s. We covered everything. Remember on August 5th, without mixing words, all hard, all out, hard long, cover all shorts, reverse into hard long. That was August 5th. So, so we got that. So consider it really the previous short trade. And now the next one, like I said, the charts aren't as clear right now for sell signals. I need to see a reversal. So like I said, you could take a shot, but it's just a pot shot. So I can't make a strong case. But I'm watching these guys. I'm watching to see how they react over the next week or so once all the earnings are out of the way. Wells Fargo, same thing. Again, these were all covered back here. Divergent high, sell signal on the trend line break. A lot of these guys dropped double digits. They were profitable trades. It was almost a 20% drop in Wells Fargo, and put in a divergent low, and it rallied. And now we have the divergence in place there is only grown larger on this ever so slightly marginal new high. So that's it. I can go through them all. There's a good example, Citigroup. I guess that's what that subscriber mentioned. Look at that. This is a 1-minute chart I just toggled down to. So here's where we closed yesterday. We opened up. There's the opening line, the blue line. So we popped up. Citi popped up as much as almost 2%, and it's been nothing but a hard fade so far. That's the kind of thing where I'm saying don't react or read too much into the initial reaction. Look at that big red candle right there, down through the uptrend line too. So that's it. I could go through them all. This is Apollo, Apollo Asset Management. Nice uptrend line, which triggers sell signal. So just do this like what we did before. Set up a bunch of alerts. That's what when I went over the financials. If you had an alert there, right there, you got in that morning. You didn't. It wasn't a runaway thing. It didn't gap down. You had plenty of time to short it on the breakdown, and the stock fell 21%, and you made 21% or 20, close to it, in 3 days. And you covered it because it bottomed on August 5th. So you would have covered that low right there, and milked every percent of that, got every penny of that 21% drop, and then or reverse long too. That's it. So anywho, that's there's our next sell signal right there. I think I just set alert, but I'll do it again. PNC. All right, so let's just wrap up by going through the earnings schedule. Okay, so here's UNH. As I said, I like to play the game. I'm gonna move this to the left here so we can look at charts. So I'm just gonna go over. Let me grab this here and move it off to a different screen. and I'm going to load now. UNH. These are the stocks that reported this morning. I told you yesterday, but I didn't get around to it. I had just too much going on. Still, getting in catch-up mode. You can see what I'm doing here. This isn't all these lines are already annotated in this chart, including this one here. You can see I had a divergent high on this stock as of created the 14th yesterday, and I was going to cover it in there and tell you I was clearly expecting a negative outcome based on that clearly bearish technical posture. And this is what happens in earnings. It gapped down, about 10%, and it's way down, still down. Right now it's at support. It bounced at 550 was my first target, and we're right there right now. We had what I call a momentum fueled overshoot this morning. But again, the charts were indicating this one would go south after earnings, and that's what it did. The other ones that reported today were Bank of America. That one so far is holding the gains. But it's up 1%, 1.5%, I'm sorry, not much. WBA, this one had a bullish chart. So again, had I gotten around to doing this yesterday, you can see these lines were there yesterday. Created that. I created that line back on May 29th, and I updated it yesterday right there. So positive, aka bullish divergence, and the stock's up 14%. So this is, like I'm saying, this is what typically. It's not 100%, but I'd say I'd probably bat 80% when I do this on predicting which way they're going to go after earnings. Again, if the chart's ambiguous, not very clearly bullish or clearly bearish, it's a crapshoot. You can flip a coin and decide whether the stock's going to be up or down after earnings. Citi reported this morning. That's the one that sold off hard. I just covered. Goldman Sachs. And I do expect more downside in the bank. So far, Goldman's up, but giving up most of the gains today. That's the common theme. Look at this. This thing popped up today right after the open. Some poor sucker was buying this thing at 3.36% gain, and it just faded almost all that gain. It's about flat right now. And so that's it. So these guys are reporting hunky-dory earnings on. And the banks of all the companies out there are the king of cooking the books, and the regulators let them, mark to fantasy rules and all that other stuff. And either way, let the charts be your guide. I don't see any sell signals on this one yet, but I'll tell the first red flag if it falls back below. These were your previous highs. This is a breakout to new highs. If it falls back below 513.40, the breakout has failed, especially if it goes below this primary uptrend line right there. Lights out for Goldman. J&J, I won't do them all. We'll go through here faster. J&J has been all over the place since earnings. I don't have a strong opinion. I already put in divergent high, but I wouldn't have called this one because it already played out. We already broke down, and the stock already fell 5% or so off that divergent high. I didn't mean to click that. I think I hit a space bar and it jumped to the next stock. All right, let me cover a few more. That was then. This is now. Okay, that was this morning. I'm just going through the stocks that are reporting tonight. UAL, strong uptrend. It's getting a bit stretched at resistance. I don't have a strong opinion, but I'll call this one down. So overbought right now. I get a little bit of divergence there. Let's see what the 60 looks like. Yeah, you get some divergence on the 60. All right, so I'll call UAL down after earnings. Not strong enough that I'm going to bet on it. I'm just IBKR, Interactive Brokers. Really stretched here. Yeah, I think the upside on this one's limited. Negative, big divergence. So in the coming weeks, whether they pop tonight after hours or not, I'm calling that one down. This is your first target, about 128.70, and then down here at about 106.80. All right, we have JB Hunt, JBHT, Trucker coming off the divergent low, but a lot of that's already played out. So that resistance got a big gap. Again, it's already moved. I don't have a strong opinion. Probably guess that one up, be my guess, but that's just a guess. This one, SGH, nope, that's not the one. I typed in SGH, but there is no company. I already checked that this morning. SGH right here doesn't come up as a ticker on this charting platform, so I don't know what that's all about. Let me move that back out of the way. Either way, this company, whoever SGHC is, it is a different company, Super Group Limited Gambling. If it pops above $4, this thing could run. It's been basing there, so there's a trade idea for you. Where to? Probably all the way up here. Be about a 42% run. All right, there's another bank reporting, Pinnacle Financial tonight, PNFP. Bearish rising wedge, divergence. We could wedge higher. I could see these divergence lines moving up, but ultimately this one goes down after earnings. Again, whether it's tomorrow or a month from now, 2 months from now, and your first target's right there. Okay, I've probably lost most of you now. I told you I'd do this. I just wanted for kicks and giggles because we have so many financials. So that was the end. I didn't cover everything reporting tonight. Now I'm on to Wednesday morning, just in case I don't get to do this tomorrow. Morgan Stanley, big divergence. This thing's gone parabolic. How much further is it going to go? A break of this trend line will be your sell signal. This one looks to be headed down in the coming months here. ABT, Abbott, no opinion. USB, another bank, reporting tomorrow morning. Get the divergence here. I'm trying to move that one. Same thing. All the banks I'm calling down again over in the coming weeks to months here. Citizens Financial, there's so many reporting this week. That's why I'm doing this. Same thing. Okay, so I'm going to keep telling the same thing because I see the same charts. Birds of a feather, right? The group moves, they flock together. Negative divergence. T1 was already hit. Remember, I covered the banks back here. That was a short trade. I gave you, I guess, a first target there. We hit it. We bounced as expected. Went up, made a marginal new and still divergent high. We got resistance here at about $45. Nice resistance, and we're almost at that now. So that's it, guys. I could keep going. There's a lot of stocks reporting. This one reports tomorrow as well. Tomorrow morning. Wednesday. Yeah, Wednesday morning. And that's SYF, Synchrony Financial. Same thing, divergent high. Looks to be headed down. There's your downtrend line and potential targets. So let me wrap it up here, get the video out to you guys, and I'll keep hunting for new trade ideas, and I'll try to do my best to catch up on the remaining comments that I haven't answered yet. I think I've got to most of them. I'm going to go back a couple more days and see if I missed any. This has been Randy Finney with Right Side of the Chart. Have a great day.